day on the markets, approach with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. And we have such an interesting week already after a very, very interesting Friday. So we've been seeing, if we zoom out on our chart here, and this is a crazy chart, this is the SPY, right? And we've just been kind of plotting up and kind of moving up, and I even made a video and I had a whole segment on how to hedge a small account, I believe a week or two ago, because I said something like this may happen, and it did. So midday on Friday, in case you missed it, what had happened was Trump said that we would impose tariffs on China for up to 100%. Now, that caused a lot of fear in the market. Obviously, when the market's trading at all-time highs, some people are going to take whatever stab they can to short the market. And as you can see, this is what happened. We had a pretty hard fall from grace with the SPY closing down 0.27%. And the Q's closing down even starker, even darker, at 3.47%. And IWM lagging that just a tad at 2.99. So a big down move on all the indexes while we saw volatility rocket to the upside as well. What had happened over the weekend is that Trump started to say, oh, well, we'll give it to November 1st. And he kind of eased up on the, we're going to impose the tariffs. I love President Xi, et cetera, and kind of pulled back on the harshness of it. I believe the term on Wall Street is taco. And Trump obviously tacoed right away. Now, quick side note and speculation. And if you're on social media, you may have seen this. I know not all of my viewers are on social media, so some of you just watch on YouTube. What was very interesting about this move was what we saw on Friday after market, which was the largest crypto liquidation in history had occurred when Bitcoin had a sharp descent off of what had happened, off of the news. That's not Bitcoin. Hold on, let's pull up Bitcoin. And I'll show you guys. in case you missed it, look at the daily. Bitcoin fell from the highs, right, of 126, and this is obviously, these are daily candles, so we'll just look at this candle to be fair, which was the Friday that this happened. The high of this candle was 122,582 and hit a low of 108,437. So almost, whatever that is, 15, 16K came out of Bitcoin in a sharp liquidation move. And what makes this suspicious is that there was a brand new crypto wallet that was opened and put a load of money on a Bitcoin short just before the news happened. The market fell and they closed it out and pocketed, I think it was $190 million or something like that. Take with that what you will. If you are someone who's speculative like myself, I would speculate that someone obviously knew, and we always like to say, someone always knows when something's happening. This was way too close to the vest though. And this was way too sketchy. Like sometimes we see people trade options contracts and you see like a suspicious order that's really far out the money, maybe because someone knows someone's going to get bought out or something like that, right? But because of the timeliness of this entry on a brand new wallet that happened specifically like almost moments before the sharp fall, makes it very, very suspect. And I would go so far to lightly suggest that it is someone in President Trump's circle that knew that there was something that was going to be said that would shock the market. And when you have a short like that, when you take a short into Bitcoin like that, it's obviously going to affect the price right away. On top of that, it's going to force liquidations as you fall. So stop losses are all going to get rated. And when you get liquidated, when there's slippage with crypto, the price falls even more rapidly. So if you were to be a bear, that was the bear move. And I think it was very calculated, very suspicious. We'll come back to that at a later point in time. But I think there's more of a story here, and it actually wouldn't surprise me if moments like this is why I think the SEC is actually going to crack down on crypto in whatever way that they can, very, very, very hard. Because moments like this can ruin people's lives when the market makers are effectively those participating in said market. And there are times where illiquidity can take over, in this case a sharp descent, with stop losses getting rated, etc., and consequently cause a massive fall like this and people to lose even more than they intended to lose. If you don't know about stop losses, you can fall through your stop loss or it never triggers, and you can have a really bad time. So figured it would be, I don't really talk about crypto much on this program. I don't personally invest in it, but I figured I'd highlight it as something to at least be aware of, because that's very, very, very suspicious. Now let's get into the week. We're going to go through our weekly catalyst, and we're going to see what's going on today, because I know a lot of you, I'm sure, are more interested in what I have to say for what we're looking to see on the market today. So actually, what we'll do first, we'll flip the script just a little bit. What's up, Toby? Toby's saying sup in the chat. Good morning, my friend. We're going to flip the script a little bit. I'm going to go over the catalysts in a little bit. I know I like to do that typically before the market opens, but because of the fall on Friday and because of the rise we're seeing now, I think it's more prevalent for me to talk about the current market action before the market opens, because it could affect you in any of your open positions. So I feel like that's more relevant to talk about. Now, on Friday, again, as I mentioned before, we saw a big spike in volatility and we saw the SPY drop precipitously from its highs, as did the Qs and as did IWM. Now that we're in the open today, we gapped up on the SPY from our pre-market and kind of just traded down a little bit to sideways and now moving back up a little bit here. Typically, there is an old adage on the stock market, and it's markets never bottom on a Friday. I'm not sure if you've heard that, and there's some truth to this, actually. And if you look into this, feel free to fact check me. I believe the statistic is 95, 92. It's a high 90% statistical chance that if the SPY closes under 1.5% on a Friday, which in this case it closed 2.7% down, right? So it surpassed that goal. If it closes under 1.5%, then the following Monday, the Friday low is broken. This causes some interesting things to occur in my brain. So again, this is a high probability chance of it occurring, but doesn't mean it will, right? I would argue that it would be more likely to see the lows of Friday break today if we saw a gap up with no news to change that. Because the drop on Friday was so sharply filled, or fueled by the news of imposing those tariffs and essentially that news being reversed, right, then I would actually make the argument that the SPY would continue to the upside today and go against the market adage of markets don't bottom on a Friday. So I actually believe that today we would see that 10% chance of the market actually staying higher or not at least breaking those Friday lows. Now, that doesn't mean it will guaranteed to happen, right? Because there's still a high probability that it would. So what does this mean for you? Well, and you guys know, I'll tell you when to be risk on, risk off. I would exercise extreme caution this Monday morning, especially with where volatility went and where it's currently going, and not to mention the IV across all three indexes, how it's sitting, and we'll look at that when the market opens. I would be extra careful because, again, there is a few things at play here. One, today's a holiday and banks are closed. Now, doesn't affect the stock market really, but it can. And what I mean by but it can is, especially if you're in a cash account or you're a cash account trader, settlements are changed. Now, that obviously doesn't really affect the big money in the stock market, but with certain banks closed, that may impact money flow in general. I don't really think it will be a big catalyst, but it could impact volume on the market as some people may just take the holiday off, right? So that's something to consider, and we talked about that last week into Friday, and then obviously the news happened and the market fell out. So that is a risk factor. Risk factor heading into the rest of today is, again, to reiterate, that news that originally caused the fall was essentially reversed. So if said news never changed and we got a gap up, then I would be extremely bearish. But it muddies the waters a bit because the news that caused the market to drop was essentially reversed, negated a little bit. So I would exercise some caution in that regard as well. What I anticipate to see on the market, and part of the reason why, if you don't know, I'm going to be live today, I'm going to be live tomorrow, I'm going to be live Wednesday to walk you through this week because I think it's going to be a little bit of a crazy week to start the week, and we'll talk about our catalyst this week in a little bit. I just want to get through my spiel here before market open. I think there is a probability of two things to occur right now, and again, I can be wrong, but I think there is a stronger likelihood of a market continuing to the upside due to that news reversal. And again, the only thing that's really going against that is, statistically speaking, there is a higher probability of the market going lower, but I think this is going to be one of those rare times where it doesn't. There's two scenarios I can foresee here. I foresee either a V-shaped recovery or 1 to 2, meaning today to tomorrow, maybe Wednesday with like a doji candle, but a slight bullish recovery before pushing lower and sweeping Friday's lows, meaning essentially we'd have a weekly candle close out lower than Friday's low. Either way, what I'm looking at here for the next 1 to 3 days is leaning more bullish to neutral, if anything at all. We will see when the market opens in 1 minute how things change, but that's kind of where I'm leaning to start the week. As always on a Monday, you guys know I take it very slow on a Monday morning, especially the first 15 minutes or so. IV tends to be very high. Volatility tends to be very high. So unless you're already long something and you want to capture some of that extra IV, you may want to just wait it out, especially with what we saw on Friday, especially on a gap up after a sharp move down. If you're a day trader, I would strongly suggest you consider sidelining yourself just for a little bit here, kind of let the trend develop on the day. Guys, if you haven't already, I like to ask you guys one time before market opens, once a little later as well. Do me a favor, interact with the stream however you like, wherever you are, whether you're on X, YouTube, Instagram, Kick, or Twitch. Like the stream, subscribe, or follow me if you haven't already. And don't forget, once we get over to 500 subscribers over on the YouTube channel, this will be an everyday show. So if you enjoy the show and you want more content, do me a favor, pop on over to YouTube and hit subscribe. All right, market's about to open here in just a minute. Good morning, Hatchet. Hatchet drop in the morning in the chat. Good morning. All right, market's opening at 660-ish, high 660s right now. I'm anticipating to see more green than red on the board today, but that can change. Like I said, or like I prefaced the whole conversation, that there is a statistical significance of the market breaking Friday's low, which would be a pretty stark drop from here. It's 8 points. But will it happen? That is to be seen. I don't think it will, like I said, and I'll stick to my guns here. But I'm just highlighting that again as a very real potential risk. All right, I'm just checking out some of my open positions right now. Man, hard mover. Uranium stocks are pushing. Up 17% right now. And NNE, I highlighted that in the program as well. That's also up about 7% into the open here as well. So we're seeing some dips being purchased across the board, but no doubt not without a little bit of volatility here. Market not really going anywhere just yet. Let's check out the Qs. Qs pretty flat as well. IWM pretty flat also. I'm getting a ton of alerts fire off. I got to go through these in a little bit. I've gotten like, I know you can't see them on the screen, but I've gotten at least 10 alerts fired off. So that means we're hitting key levels of support where I would want to take an entry. And I've gotten at least 10 fire off since the open. Look at IWM pump here. Good pump on IWM. Seeing that pass through on the SPY and on the Qs. I wanted to highlight something on the Qs. Oh, that's why. All my lines are hidden. You got this key LOI right here at 599.36. Watch this for upside if you are bull on tech. 601.65 on QQQ. If that breaks, you're going to push the Qs bullish very quickly. So you're going to want to watch this level with a tight eye today. So I would anticipate that not breaking on first touch, especially with this pre-market high up here at 601.22. So obviously some level of liquidity here, especially with a wick and then basically a lower high before grinding down. So getting past this range here is what you're going to want to see as a tech bull if you are a tech bull. SPY is in this little range as well. So look at that. We actually saw in pre-market 66175 right before the market opened 921. Just a few pennies shy of my LOI here at 66178. Reject and move lower before the open. I'm getting a ton of alerts. So guys, just so you're aware, and I'm going to keep saying it, when I get these alerts fired off, and we'll look at some of these names because I've already had at least 15, that is telling me that there are many stocks at a key range of support that have fallen down and hitting a support and now are coming back up essentially. So I'm getting a ton of alerts. So this, from a sentiment point of view, would tell me that the market is trying to push more bullishly, at least in the very near interim. Qs are a little shaky, but looks like the strength. Look at IWM go. IWM broke the 240-239 LOI, so looking like a clean break here, up 2% on your small cap. So watch your small caps for some strength continuation. Right now, the laggard essentially, I mean, by percentages, the Qs are the laggard, but from just a look from candlesticks appearance, SPY's looking a lot cleaner than the Qs at the moment. Let's look at our Mag 7 names, kind of get an idea of how things are looking across the board. But before we get into that, let's check out our VIX. Currently have a VIX of 20 on the nose, which is high, so be aware of that, guys. Anything above, really, this month, just so you're aware, anything above 17, 18 is like high volatility. So we're clean above that. Intraday today, what you're going to want to watch is staying under 2030 on the VIX. Theoretically, if we stay under 2030 on the VIX, we should try to move into decay. So if we see some bullish action on the SPY, we could see volatility decay to the downside, especially with our VVIX looking like we're going to grind a little lower here as well. UVXY right now at 1140, so it's also substantiating, or at least supporting, I should say, how volatility a little longer term is looking to move down or try to move down here in the interim. Google right now had a little bit of a push out the gate here. Let's look at the daily chart. Had a hard fall. I spoke about this on the show, and I mentioned how we kind of had an inverse head and shoulders setup. That Friday candle kind of ruined it. It was valid until Friday, essentially. So if we can get a pump up here on Google today, we're just going to pretend like Friday didn't happen. And we're going to see if we can rock a Google trade to the upside here. So I'm going to wait and see. And just full transparency, I do have some Google exposure right now. I did open some longs. So today is really going to be a deciding factor for me if I want to hold on to those Google longs or not, because technically that Friday candle did break the pattern. But depending on how today goes, like I said, there is a chance that everything just get violently reversed essentially. So you're going to want to keep a tight eye on Google. Pop back to the market here. I just got an Apple alert go off, so we'll see that in a second. SPY back to open essentially. Qs are weak. Tech is weak right now. And if anything, your strength is found in your small caps as tech is selling off at the moment near pre-market lows. So you're going to want to watch that pre-market low here, 597.42. So if you're a bull today, we're really close there on tech. You're going to want to see that 597.42 area hold. And you can see a clean wick here and bounce, and basically like a double bottom there in the pre-market. So we're going to want to watch that very, very, very closely. Let's look at NVIDIA. NVIDIA right now trading at 188.26 above its 186.21 LOI. Let's check out the daily chart. Man, those Friday candles we're seeing on all these charts are ugly. If Nvidia can hold it together today. We could see a tiny little rally up to this 191.05. You kind of see an area of, I don't want to say consolidation, but there's some price activity here, I guess I kind of want to say. Look at the high of this candle, 188.14, which is right around where we are. I'd look for that to hold very, 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 very near term here to give some breath of air into Nvidia to the upside if you're a bull. Microsoft selling down here in the open, back to this critical area of support on Microsoft at 512.76. You saw that support was broken on Friday. Now we're gapped above it and basically back testing it here today. This must hold. If this breaks, then Microsoft pushes from what was looking like a pretty clean bull reversal back to bearish. The weekly never got out of the gate here for like a decent reversal. You could argue that you're trying to make some level of a inverse head and shouldery kind of shape here, but if it breaks this 512.76, which we're on it now, essentially, we just technically broke it, it is not looking good for Microsoft. So be very careful with that. Oh, that's why I got the alert. So I got my Apple alert here. We filled the gap on Friday. Now we're still in this little gap here from 919. Testing, or we actually opened at the 21 EMA, rejected lower. So far putting in a higher low for now on the daily chart. You're going to want to watch 24343 on Apple to hold on the day. It's looking like big tech is getting smacked around a little bit here on the open. All the gap ups they're all green on the day still, but they're not not too healthy. Tesla sitting on the 21 EMA right around this 419.81 LOI. Not much to see there. As long as it doesn't break that Friday low, I think it's okay short term. A setup like this would support my thesis of what I said in the beginning of seeing a little bit of a move or a grind sideways, slightly up to sideways for the next 2 or 3 days before breaking lows. So if anything, this isn't the time to short. But if it doesn't get out of dodge here, basically getting over 430.43 in the next day or two, then Tesla could see more downside if it breaks that Friday low, which is a realistic possibility. Amazon here is not seeing as much strength, well, with the exception of Microsoft currently, but is not seeing as much strength as its Mag 7 peers. Big down candle here, and look at the wicks down here. It is at least hit some area of support here above the 200 MA, which is great on the daily. But like I said, under 221, this is not a bullish stock. It did get a nice push, so as you can even see right here on my chart, on 10-7, it broke that 221. It had a nice two-day rally there. It's pretty solid, and then Friday kind of killed that. But I would not be a bull on Amazon until it can hold over 221, even backtest it. That backtest obviously was violated by this Friday candle here. No bueno. Meta on a key level. As I said, 702. Sorry, I am stuttering. 70802 on Meta is very important. That's the open gap. Well, it's filled now, but the gap from their earnings, back-tested here, is clearly a sign of some level of significance here. If you're long Meta, you need to see this level hold. As I've said many times before, getting under this is bad. You're starting to get your short-term EMA, so like your 8, your 13, and 21, is starting to put pressure on Meta. So those moving averages are moving down now. If Meta doesn't reverse here in the next few days, this will break, this will go down, and at least I'd call for a 200 MA tap at 66963. Open got underneath that 814 area, so not great there. We'll reassess that in probably a day or two. This can reverse very quickly. And that's what I got for you guys at the open here. Let's actually check out our IV, because I'm sure that's juiced. Yeah, so I'm not sure if you guys remember, for those of you who watch the program, our 52-week rolling IV on my last stream, which I believe was either Wednesday or Thursday, was like 14-15%. Just from that day to today has juiced the 52-week IV, or the average IV of the chain, essentially, to 20%. So IV got juiced 25% on SPY contracts. And I know you can't see this because I popped it up, but IV percentile right now has spiked over 100% essentially. IV percentile right now is at 75%. So that means that only 25% of the time has IV been higher on the SPY. What does this mean, in case you don't know? This means that there is a higher probability of more erratic price action on the overall market in general. Now, that is a little bit disputed by our HV. So our HV percentile is our historical volatility. So IV is for your volatility on your options chain. HV is for your volatility on the actual stock. So in this case, the market, the SPY, right? And that's sitting at a 45%. HV percentile is 45%, meaning the market has been, in the last 52 weeks, 55% of the time more volatile than it is. So you have a little bit of a discrepancy here. So what that tells me is that the market has risen, so it is more volatile, but that options traders are pricing in a even more volatile move. So volatility has increased on the underlying on SPY, which is very obvious. We saw that big Friday candle. But on top of that, options traders and the general market is pricing on a continuation of a period of higher volatility potentially, or at least in terms of price action here in the near term. So that's very, very, very interesting to me, as we've gone essentially nowhere on the open just yet. I do want to get into our Catalyst Watch for the week, as I like to do with you guys, as we like to do on the program. That way you guys can be kept abreast to what may happen this week. That way you're not caught out, surprised by something that you don't know what's going on. So this week for our Catalyst, what we have on watch, let's see. Today's actually a pretty quiet day. Cross our fingers. We'll see for now. So far, today is looking like it will be a quiet day. We have one Fed speaker today, and that's about it. That's basically the only item of significance that is planned for the day. That is at 12:55 p.m. Eastern, so keep an eye on that. Now, I can't say the same for Tuesday and Wednesday. Kind of the same repeat of what we saw last week, where the meat of catalysts, is going to be between basically Tuesday and Thursday. We've got basically every bank reporting this week. Not every bank literally, but most banks. We got the ones that matter. You got JP Morgan and Wells Fargo tomorrow morning. You also have BlackRock tomorrow morning, Goldman Sachs tomorrow morning, and Citi tomorrow morning. So you're getting hammered with banks. And if you don't understand or you don't know, banks reporting their earnings are very, very, very crucial, because although I like personally, I like to look at like Walmart or Costco to kind of get an idea of like consumer spending, right? Your bank earnings are basically going to give you an idea of how healthy the consumer actually is, right? Are people borrowing money? Are people making money? Are people willing to borrow money at the current interest rate? And it doesn't necessarily imply how the Fed may move its hand, but it can kind of give you a little bit of an inkling on what may happen down the road. So that in itself alone could be enough of a catalyst to drive us to the downside or push us even higher. Especially if all the banks are seeing the same data, right? If they're all saying, hey, everyone's going like this or everyone's going like this, then that is definitely going to impact the market very, very strongly. So if you are swinging any options or any open positions overnight, just be very, very, very aware of that. Now, going into tomorrow also, we have a few Fed speakers as well. Those, just so you know, those earnings calls are going to happen in the pre-market and through the open. And I'll be live tomorrow too, so we'll talk about them as they happen, and we'll highlight any important information, which is part of the reason why I wanted to go live tomorrow for you guys as well, so we can highlight any of the important banking information if there is something said on these earnings calls that may impact the market as a whole. The cherry on top of that is Powell's speaking tomorrow, everyone's favorite. He's speaking at 12:20, and then you've got Collins and Waller at 2:25. So Fed speakers, banks, and Powell tomorrow. Big day coming off of this very quiet day. Hopefully, knock on wood. We'll see. Wednesday, going to the middle of the week. And again, I will be live on Wednesday. You've got more bank earnings. We got Bank of America. You got Morgan Stanley. You also, for those of you who trade healthcare, you've got Abbott, which is going to be a big one for those of you that are long healthcare. These names, again, these are big names in the industry that will affect the market as a whole and affect their individual sectors, at least in terms of sentiment. So even if you're not trading these names specifically, but you're trading names adjacent, maybe you're trading some small biotech companies, or if you're trading a regional bank, right? A smaller bank that offers maybe like a high dividend or something like that. These are things you want to be conscientious of, because it could give an inkling of a hint of how that particular company may perform on their earnings as well. And then you got a few Fed speakers as well on Wednesday, along with the Fed Beige Book, which typically doesn't do anything to the market, but there are times where something is mentioned in the Beige Book that can affect the market, so at least you want to be aware of that. Fast forwarding to Thursday, you've got Taiwan semiconductor earnings on Thursday, but that's going to be pretty big. And a few Fed speakers again. Just trying to see what else is important here. Not much. Basically Fed speakers and Taiwan Semiconductor. And then rounding out the week on Friday, like I said, 1 or 2 Fed speakers. But again, the meat of the move, again, in terms of catalysts, middle of the week, Tuesday through Thursday. Really Tuesday and Wednesday in particular. Which is, again, part of the reason why I'm going to be live on tomorrow and Wednesday. Kind of help you guys through that if we see any sort of irrationality, right? So that's what we got coming down the pike in terms of catalysts for this week. All right, let's take a peek at the market, see what has happened, if we missed anything. And the answer is no, we have not missed anything at all. The market is just kind of sitting flat here, which, to be fair, isn't really shocking. When we get a hard move on that Friday, we get a gap up off of basically, like I said, a reversal of that news. We should see price kind of stay flat for now. And I would, again, anticipate a range break to the upside here and a push. Have I put my money where my mouth is? No. But to be fair, I am already exposed long on SPY, and I am exposed long short UVXY at the moment as well. So I am exposed more long than short right now. I'm not opening a new trade, but you could do with that information what you will. Let me check something here real quick. Let's see. If you guys have any individual names of stocks that you would like to drop in the chat, feel free to do so. And again, if you haven't already, do me a quick favor, interact, drop a like on the stream. If you haven't, how many likes do we have on the YouTube stream? I asked for this. We got 2 likes on the YouTube stream. Can we get that at least to 10? If we get that to 10 likes, I would greatly appreciate it. I know some of you guys just pop me in your pocket and you listen, or you're doing your own thing. Do me a quick favor and just support the stream if you enjoy the content. Pop it open real quick, hit the like button, then you can minimize me again if you don't want to see my face. I get it. You just want to listen, that's fine. But do me a quick favor and interact with the stream. It helps me very much in the algorithm, and I appreciate your support, all 150 something of you across every streaming platform. Thank you once again. All right. Let's take a peek at, I had a request for one stock, so we're going to look at that in a second here. But I want to keep an eye on SPY right now because we actually might get that range break I was just alluding to like now. It is possible. This is basically your trigger here, 66178. And your trigger on the Qs is up here at 60165. And I guess you can use, so we have a few things lining up. So these areas of support resistance here, your LOIs, are essentially kind of in the same place on the SPY, on the Qs. Qs are a little bit further away, and on IWM. So if we see all of the indexes work together and break these levels with volatility staying sub this 2030 at least, then there's a higher chance of volatility grinding to the downside. UVXY, so again, this is our longer term volatility, right? So our 30-day outlook on volatility is already kind of moving to the downside here, while VIX is kind of sideways. So this is suggesting short-term volatility is a little bit higher, but longer-term volatility, at least things are seeming cooler, right? At least for now. So that's something we want to definitely keep a tight eye on today as we get through the day, and seeing if we get a break on volatility to the downside, as that will more than likely support a stronger move to the upside in general. All right, let's look at... So here's a special request I got today. We're going to take a peek at stock ticker URG. So this is a uranium company, and these companies are very, very hot right now. Now, this company specifically is a $727 million market cap company. So it's a smaller cap company, which tends to mean that it moves a little bit more erratically. So you want to keep that in the back of your head if you have exposure, want exposure to this kind of company or this kind of sector in general. Now, this sector in itself is already volatile, so you have to keep that in the back of your head. And a lot of these names, look at it on the daily chart here, have just been grinding to the upside pretty solid. Why I don't like this name here short term, and why I could like this name a little longer term, is a multifaceted piece here. So what we're seeing here is essentially it has moved up and continued to move up over the course of the last 4 days, but leaving a wick behind on the high end every single time, kind of insinuating that there could be some selling pressure going on here. And now, again, if we zoom out a little bit on the weekly here, you can see that this thing has rallied from the tariff lows at 50 cents and 4x'd itself in a very short amount of time, which is very impressive. The other thing I want to highlight here is the volume on this name at this level is fairly high. Let's look at the monthly, actually, because I think it was the highest volume ever. Very close, actually. Highest volume ever was about 2 months out after the tariff drama, and then again in September. So we're seeing a lot of high volume, which is showing great momentum. I wouldn't be a buyer of URG here yet. To be very clear, we've got a pretty decent area of resistance here at $2.01, $2.10, and $2.15. So we call that a cluster when we have areas of resistance essentially tightly wound together. And this is on a longer time frame, so your weekly and your monthly time frame. That tends to be an area in which people are going to sell. Now, where I would consider a long on URG is if it comes down just a tad, a little bit more than a tad, but comes down to this general area, 184 to 187, with a stop underneath, basically underneath this level here of 171. So I got two LOIs down here, 178 and 171. So getting an entry between 178 and between 185-ish would be the sweet spot for me from a risk to reward standpoint. So if we want to calculate that out real quick here, let's say I got in at 185. Let's say I put a stop just shy underneath that one. We'll put it at 170. And then let's zoom out here a little bit. And let's just assume, right, the most conservative metric, that we only get basically to this top line cluster. So I'm saying it won't go any higher because that's like the strongest resistance, right? You're getting a decent risk to reward here of 2.72 to 1. So almost a 3 to 1 risk to reward. If you get in around 181, you're only risking about 6% downside for, about 18% upside, as you can see. Now, to reiterate, I think this name has a lot of momentum and can carry on with that momentum to the upside here. I do think it needs to cool off a little bit, and keep in mind, again, it can be a little whippy because it is a smaller market cap company. With that being said, if we zoom out on the monthly, this is a strong move. So no doubt this is a momentum name. So you have to understand that with your risk analysis, that you are buying high momentum. So for that to be successful, the momentum needs to hold, which is why I would put on such a tight stop up here if you were to take a stab. Getting over this level here at the 215 area opens up the door to 286, 337, and 364 here in the near term. So let's change this. Let's zoom in again. We'll go to the weekly. And let's change our analysis here, and let's assume that we get this next price target. So we break the cluster, right? So we're taking a little bit less of a conservative standpoint. We break the cluster and we get to the first price target after the cluster break. You are now sitting at almost a 9 to 1 risk to reward, risking 6% downside for 58% upside. And I do think that is actually a realistic price target here near term due to it being a momentum name. Now, again, I will reiterate, the momentum must hold. After getting a period of a cool down here and coming down to this general area, I believe would be a good time to long it with a specific stop here just under this 171 area. That way, again, the risk reward is in your favor. If you see the volume start to dip, or if it starts to chop along or anything like that, where you could see a period of consolidation here before breaking to the upside, so a few days is fine. But if the volume starts to die off on this name, or in general, the theme of uranium starts to die off, so you're seeing a lot of other uranium names go down, then you're going to get stopped out. That's why there's a stop loss on. I wouldn't trade this without stop loss. This is going to retreat down pretty sharply. So with the right amount of risk, and with the right amount of size in a position, I don't hate URG here in the near term. Again, I would like to reiterate that a proper entry would need to be had. I would not take a long up here just because we have this cluster of resistance here. The second thing you could do if you really like uranium and you really want to get in on the momentum here is get in on the break of 215. So ironically, after you break over the cluster, you can then get in on the break at 215 and put a stop just under like 210, something like that, where you still have exposure to the long side here. And you're actually buying the breakout essentially, and you're buying even more momentum, like you're going to ride the momentum trade to the upside there. So there are two ways you could trade it. I just wouldn't enter personally right here on URG. All right, guys, that is URG. Let's go back to the market, see if we missed anything. Oh, okay. SPY's on its trigger. Qs are not there yet. Like I said, Qs are lagging a little bit, and IWM tapped its trigger point. So we're seeing things are moving. Yep, UVXY is grinding the downside here. This is a good sign. VIX is sub 20. The market is trying to feel a little bit more confident. It's not there yet, make that clear, but I would still hedge my bet being bullish on the day for now, especially due to the fact that we don't have any real news catalysts that could potentially hurt or help us today. We have two Fed speakers, which, obviously could do something. But outside of that, sorry, I had my data wrong. Is it 2 or 1? Hold on. We had one Fed speaker today. We had Paulson at 1 o'clock. Outside of that, we really don't have much that really could shake the market here. Cross our fingers, knock on wood. And again, even though the old adage and that high statistical probability of the market not bottoming on a Friday is there and is lurking in the background, because of this very, 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 very specific scenario here, that the news that caused the fall was immediately reversed, essentially, I'm sitting on the lower probability side of the fence here that the market will reverse and push to the upside here and continue to the upside, at least today. We're going to have to take things day by day, especially with what we have on the docket for tomorrow in terms of potential news catalysts, with banking reporting and a bunch of Fed speaker and Powell speaking tomorrow. You got a lot to look at tomorrow. So I'm thinking we see a little bit of a decay in volatility, but not like a drop off completely. I think our longer term volatility, UVXY, will continue to fall actually. Will fall more, I should say, precipitously than the VIX. So I think VIX is actually, and you're seeing it right now, VIX is at minus 8%. UVXY is almost minus 11. I think you're going to see UVXY lower than the VIX today because I think spot VIX is going to remain a little bit more elevated because of the week that we're looking at, so the next few days here, while UVXY was very juiced on that Friday move, and longer term volatility can and should decay a little bit more because it's a little too hot. You're hitting this two supports here on UVXY at 1125 and at 1116. So getting under this puts 1050 back in the conversation for volatility. And again, full transparency, I am actually short volatility at the moment. I am short on UVXY. If 11 breaks, I think you get a very quick fall on volatility. So if we see on UVXY if 11 breaks, and we also see, so here's your master plan, guys, if you're paying attention. If UVXY is sub 11, I know some of you love when I do this. I give you like this roadmap, and 9 times out of 10 it hits because it's very specific things need to happen. If this, then this, and you will see it. If UVXY fails 11 and IWM is over 242.39 and QQQ is over 161.65 and SPY is over 61.78, the market rallies to the upside today and does not give it back. All of those conditions must come true for that to occur, though. So we need the three markets over those key levels with UVXY sub 11, and that would substantiate the support, essentially, for the market to grind to the upside with volatility coming into some level of decay to support a move. That is going to show a tightening of spreads, which means there's more price agreement on the SPY or on SPX, which should, especially if we've trended to the upside, continue said trend to the upside. Toby says, I found that Oracle has some relative strength the last few days. I don't really have a setup for it, though. We'll take a peek, man. Let's take a peek. I know people love Oracle. I think, so Toby, to your point, I mean, you could buy this now, to be honest with you. To be honest with you, you're trading momentum. You backtested the 8 EMA here on the weekly last week. You're riding above all EMAs and MAs. You're going to break this red daily SAR here on a bar on 6%. It's a little crazy. You're buying up 6% here on the day. But you kind of have this, you broke the low here. You substantiated a new low, and now you're trying to rally over the previous low, which is a good look. If you're an options trader, this could be a good day trade for sure. This name in general, Toby, to your point, might ignore the market a little bit more due to its exposure with AI and the whole the prayer circle of NVIDIA and all the other big AI names that are involved in this kerfuffle. I don't even know what to call it. But Oracle has very unique exposure. As you can see, it's been very strong. And I think after this low period of cool down here, it is showing, like you said, some level of relative strength in comparison to the market. I like it here for a day trade, maybe even a short swing trade. If we didn't have what we have tomorrow morning, I would like this a hell of a lot more to play it on the week, like play weekly contracts and ride this out for the week. What we have tomorrow makes me a little more trepidatious, and where we're sitting on the market right now makes me a little bit more trepidatious as well. So what might be, so here, actually, what I'll say this, what might be a better option, let's take a peek. All right, this is killer. Your IV percentile right now is 98%. So IV percentile is out the butt right now, right? Massively high. So what would be the better option instead of buying higher IV? Let's leverage your position in two ways. So what is a better idea in this scenario is actually doing a put credit spread. A put credit spread will give you that bull exposure and sideways exposure. So if it doesn't work out right away, it'd still be in your favor. You can establish a position on a lower cost basis. You can establish a position on a lower cost basis. And also, because it's a credit spread, the IV decay works in your favor. So that IV dropping, which it should, is at 98%. So if the IV does drop or it slowly moves to the upside, whatever happens, is in your favor. Plus, if it goes against you, theta is halved. So because you're buying long one and short one, that theta exposure is halved. So actually, I like this a lot for a put credit spread. Quite a lot. Is there enough volume to support that? Yeah, you've got plenty of open interest here on your weekly contracts on both sides. Which, again, you're mostly looking at the put side here. And I would do that over a credit debit spread because your credit debit spread, you need to sell those contracts for as much as possible, right? Which means you want IV to increase. Well, if IV's already at 98%, or at its 98th percentile, then it may be hard to get more IV when it's already supercharged, right? So you want to consider a position where you're short IV, but still long the stock in this name, or in this scenario, which would be a put credit spread, would offer you the best risk to reward with this particular setup at this particular time, if you like the name. Toby says, yo, buy it, end analysis. That's pretty close. Hatchet says, big but still quiet news that JPM committed to invest $1.5 trillion over 10 years to support industries critical to national security. Yes, I saw that as well. But what you need to think of is the fact that the market right now is focused ultra short term, with the exception of AI. Everything else with the market is ultra short term. We're very sensitive to labor data. If the government reverses its shutdown, we're ultra sensitive to any sort of Fed speaker farting out their mouth if things are good or bad or indifferent, right? We're just very, very, very sensitive near term. Again, with the exception of AI. So any mention of something like that, like JPM investing a sizable amount of money over the next 10 years, while interesting, for at least my personal analysis, what I look for near term is of no interest to me at this juncture. Pick my words very carefully there. It's of no interest to me at this juncture. So at this point of time, I don't have interest. That doesn't do anything for me, right? Good or bad. It's just stick that in the back of my head. I'll revisit it at some point. That's kind of how I read that. All right, let's pop back to the market here. SPY broke out of that 66178 trigger level, tapped the 66305, rejected so far. It might chop around in here just for a bit before pushing higher, but we're over that first trigger level on SPY. The Qs, look how close we were. A few pennies off before rejecting. 60159 high of the day on the Qs, rejected at 601, or I'm sorry, the resistance level, that key trigger, 60165. I told you you're probably going to have a hard go of it at the very first go because of where that pre-market high was that we saw right before the open. So keep an eye on this general area, but that break should come with more volume. And IWM here, solid push on IWM. We'll see if that can substantiate any kind of continued push to the upside here. So it's looking like a lot of our strength is actually coming through on the Russell in comparison to the Qs, even though they're up basically the same amount of percentage points here. Very close move, but I like the way IWM is looking over Qs, although this is actually a pretty sharp move here on the Qs. Volatility right now, your VIX is 1960 near the low a day here at 1945, and UVXY tapped 1104, so we didn't break that 11 point yet, but we are close. Remember, if 11 breaks, plus we're over this level on IWM, which we are, plus we're over this level on SPY, which we are, and over this level on the Qs, which are almost there, we're 20 cents off, then we will see basically just a bull rally day for the whole entire day. That's what I'm calling for. Double top here on the Qs. I'm watching this very closely to see if we get that break. Hatcher says, short-term true, but JPM is bullish long-term. Trump will pull every growth lever. I'm not disputing that one bit. I don't think so. Omar says, close that Friday SPY call for some profit. Good game, Adam. Who would have known? I would have known. That's why I made the call. I would have known, Omar. He's talking about an alert I had in our Discord community, which if you're not familiar, you can check it out. Link is in the bio. I have not closed it out yet because I'm looking for a break of this level to push higher, and they're in the money right now, so I can breathe a little bit. And again, I'm looking for UVXY to break 11, which is why I'm also short volatility as well. High risk, high reward. But God bless, you made money. Can't be mad at that. Google right now getting a nice little push here. Remember what I said about Google. Canary in the coal mine, as I always say, and this is a pretty valid setup, excusing Friday's candle. If we can just erase that from our memory, this is still a very valid setup. I saw a few people on social media, and some people with a very, very strong, large following group saying how Google was a very, very valid short setup. No, no, no. It is not. Not yet. Not yet. For those of you in the Discord, you know I'm the one who I will call out the short setups when they're there. I have very specific criteria, and that's why when I take a short, it rarely misses because it's very, 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 very specific. And anyone who is in the community, you can attest to that if you want to drop a note in the chat. You guys see, when I take a short, it typically happens. We typically get downside. Seeing Meta grind up. Look at this. Look how Meta tapped this today. I told you guys how important the 70802 area is. We wicked beneath it, left a wick behind, and boom, rally to the upside. That's great if you're a bull. This is a great sign for Meta on the daily as well. It's not out of the woods by any means, but this is a good first step here for Meta to try to get some level of reversal off that earnings gap. Toby says he's paper trading Oracle as a wheel. How much you get paid for that, Toby? $7.95, 297. $7? Good for you, man. 297s. Not bad. And 290 break even, roughly. Good for you. Even on a paper trade, like it's good to practice on. Omar says, agreed. It was funny seeing you take the contrarian trade on Friday. That's me. You guys know me, especially if you watch this program. You know me. I always got to take the other end of the trade. That's why I hate trend days. Or I always look for the other end of everything. I always look for what everyone else isn't doing. Because that's just the way I'm wired for some reason, which may not be good for the stock market, but hey, it pays its dividends when you do it right. All right, well, maybe we'll look at another individual name until we see if we can get the setup played out here. Let me look at and we do an update on one of the names we spoke about. Oh man, look at UUU and QS and NNE. All names I've spoken about on the program. Holy Tolitos, all up double digits. Let's do a quick review of those. Woo! Uranium on fire. Look at UUU, NNE, and QS, which is not uranium. Let's take a peek at these names, which we've spoken about on the program. UUU up 24% right now. Big, big, big push. And I uploaded that video for you guys. If you didn't attend live, you got the video to watch. Over my, basically my first take profit point of 23.13. Solid candle here, even after Friday's little bit of a sell-off there, gapped up and pushing to the upside on UUUU. Quad U's right now continued with some momentum here. Even the volume thus far on the day is pretty solid at 16 million shares, trading near its high a day. To highlight, if UUU can continue, which it's getting a little parabolic here, so it's getting gappy and pushing to the upside. So there might be just one more gap and push here, but I'm looking at 26.71 near term. Then 31.63, and if things get nutty, filling the gap up here at 40.86, or between 40 and 40.86. Tiny gap left open. But this thing's moving parabolically. If it moves another sharp move, so another gap up, and again, it's up 23%. It's crazy. If this gets another gap up or a big candle today, I'd probably take profits, just saying it outright. But if we move up and we kind of sit in this range here of 23.13, you can even slap a stop loss on basically under the low of day here. And at least from my entry when I started talking about this, that's a 31% gain roughly. So UUU has been a big winner here. Very short-term trade, beautiful trade, and we'll see if we can get a little bit more out of this one possibly today. NNE, well, this just moved real quick. What just happened right now? Boom, 15% on NNE. We talked about this and uploaded a video on this one as well, talking about how it had this little support zone here and spoke about how important it was that they issued that offering, which was bearish in general, right? and they said, hey, we're going to sell 400 million shares in a private placement. And then the people who were buying those shares said, no, wait, we want 600 million. It was oversubscribed, which tells you that hedge funds and big money or private placement, so anyone who's in big money, private placement, family offices, whatever, they wanted more shares of this company. So yes, an offering is bearish because it's diluted. It's diluting your current holdings, which is why you saw some sell-off here. But if there's some sort of specific news like that where it says, hey, this was an oversubscribed offering, that means their demand is higher than they anticipated. And trading is just about supply and demand. So demand for this name was intensely high that it caused, again, a little bit of a sell-off here because we're diluting the stock. But people wanted to own shares of this company in this range. So why wouldn't you? Big money, private placement money wanted to own shares of this company at a 50% premium than they were willing to sell originally. Why would you not buy shares? Options, I get it. But why would you not buy shares? I know the high volume looks scary, but with the proper risk here, this was a beautiful setup and something that you guys can learn about. When you read an offering, you have to read the language of the offering, because an offering in general is bearish typically, or definitely short term, because the company's trying to raise money by diluting their current shareholders. That will drop the share price, because guess what? If you own a share right now, it's worth less than it was the previous day. However, the type of offering and what is said during that offering is very crucial, because it can lead to success like this, especially if you're not exposed to that name, or if you're already exposed, maybe getting more exposure because of that. So NNE is looking very solid here in the near term. Now, again, this is a little bit more of a momentum trade, but with that kind of backing here, this is one you could ride a little bit. You break this recent high, which I believe is the all-time high, so correct me if I'm wrong. Yep. You break this all-time high, this thing might have legs. You could slap a stop loss on here. You're already riding about 50% up, roughly, from my entry, and you can just ride till the wheels fall off. Love it. And QS, this one was super interesting. So you look at the weekly candle on QS. Wasn't great at all. Bad. But a lot of that was perpetuated by that Friday dump. And I was debating on if I was going to close out, because I was at like a break even on my trade. And I said no, because I didn't think that Friday news was really going to scare bulls out of this name. It basically grinded down for 5 days in a row here, right? It had some pushes up. There were some levels of liquidation there. And now you're seeing a solid push 19% of the day back to my first profit taking point after this little cluster here at 1786. I'm looking for this to fill the gap at 1997 here near term, for even more of a continuation of the upside. These are all my price targets of the upside here. So I like QS quite a bit here. Again, these are all momentum trades. But as long as the momentum continues to hold, there's no reason to be short these names. And there's no reason to bet against these names right now, because they are hot. Hot. All right, back to the market. All right, SPY kind of sitting in this zone here, which makes sense. We double tapped that higher LOI here, kind of floating along here for now. Q's rejected that key level 1, 2, 3, 4, 5, 6 times, but you're building a higher, basically higher lows up here. So if they can get together, if the bulls can get together, even consolidate up here, you will get that break to the upside there. IWM a little rocky here as well. And UVXY did not break 11. In fact, reversed a little bit here back into this little support zone of 1116 to 1125. So volatility is looking a little sideways right now, with the VIX getting a little bit of a pop here also. So we'll see. Again, you guys have very specific parameters of what to look for if the market is basically going to be a super long on the day. But again, I still have very short-term exposure to a bullish SPY position and a bullish UVXY position, because I think there's a very high probability of these trades working out. Google looking very solid here in the near term. NVIDIA a little shaky here. We'll see how the next 5 minutes or so plays out for NVIDIA. Microsoft defended that very key level. You see this red line on my chart here, sunk it by about 6 cents and kind of rallied off of it. It's not out of the woods yet, but that's a good first sign there. Apple's just, it's there. It's a stock. Not really doing too much. If I was a bull today, or if I wanted to be a bull on Apple, I'd want it to basically stay above right where it is here, around 247.30. I'd feel better as long as it stays north of that. Tesla just straight sideways right now. Not much going on there. Amazon, nice rally, honestly. Very solid. Again, 221, very basic, even number level to keep an eye on. Under that, it still leans bearish, but getting over that, once again, could be a nice little push here for Amazon. It was on a good little rip there until Friday. So getting over 221 is very, very important. I got my alert set here at whatever it is. Hold on, let's see. Yeah, 220.99. So the alert is set. So we'll see if anything comes out of Amazon here today. It's not too far away. And Meta is still doing a pretty solid job, continuing its rally to the upside here. Right now trading around 718. That's about it. We are kind of sitting in a little bit of a waiting phase right now. We're at a very strong waiting moment right now. Because you've got 2 out of the 4 conditions fulfilled for basically a bull day, with IWM and SPY over their bull conditions, as I'm calling them. With the Qs just shy of being there, and volatility now going down a little bit underneath this LOI at 1116. So we are very, very close to having that bull condition fire, essentially, on the day here, but we're not there yet. I do want to highlight, because I spoke about Crocs quite a bit, Crocs right now is at 79.55. I believe my average is around 77, 78. Still a solid name to consider, in my opinion. You put a stop down here underneath these lows, which I personally have, down here at 72.99. I made a whole video on that. If you haven't, go check it out. It's on my YouTube channel. I think this is a very good opportunity if you're patient on Crocs. And if this earnings is good, this is going to pop and go. I'm very bullish on Crocs. Their fundamentals are actually really, really solid right now. Just the whole apparel space in general, and you guys in chat, if you guys trade apparel, you know, Levi has been hammered. I can't think of any names now. American Eagle was the exception because of Sydney Sweeney. And guess what? Crocs just did a promotion with Sydney Sweeney. Just saying. So, in general, though, apparel's been a little hammered right now. It's an unattractive space. At least at this point in time, it's more of a bearish space. But Crocs, in comparison to its peers, its evaluation is very, very attractive from a fundamental basis. From a technical basis, you're buying this at a point where it's decently discounted, and while technically still bearish, showing signs of getting some level of reversal out of this general area. So I do really, really like Crocs here in the near term. And again, if you haven't already, pop on over to my YouTube channel. Got a video up on Crocs. I definitely recommend giving that a watch. Goes into more of the fundamental reasons on why Crocs is actually a really solid buy, at least in this general price range here. Okay. Qs are sitting around the POC. It's a little boring right now, I'm not gonna lie, guys. We're in this point of iffiness. It's iffy both ways. It's not great, it's not bad, it's iffy. Sorry, just checking something here on my second screen, or on my other window here. This is a little dry. It's a little boring right now. But basically, like I said, you guys have the setup here for what I'm watching. Otherwise, I'm not really interested in moving around too much here. As you can see, I've taken no trades, which I think is the prudent thing to do. And sometimes, as the kids would say, it be like that. Sometimes the best choice is just to kind of wait and see. And again, I already have exposure, so if things work out, I'll be fine. Like, I'll make money still, but I'd just be a little more cautious here. Look like you had a little fake out there on UVXY. Now getting a little bit of a pop again. Back to this general range here. We're showing some level of resistance and back to the top of the range at 1125. VIX, meanwhile, again, very sideways. So while volatility did gap down, it's sitting very flat. While VVIX, so that's the volatility of volatility, has mostly grinded the downside here. Interesting. Ooh, Nvidia ate a little bit of a red candle there. Yeah, if big tech could find its way over that level, I'm telling you. Apple's under where I want to see it. Again, I want to see it over 247.30 today. you're seeing the Mag 7 get hit right now, actually, in real time. Meta hit, Amazon hit, not big, but, you know, some selling here. Tesla hit, Apple hit, Microsoft hit, Nvidia hit pretty good. Google hit. So all your Mag 7 names just got hit here. There you go on the Qs. Which makes sense. You hit this, again, this trigger point, which isn't going to be an easy resistance to break, as I said, and rejected. But if we get over that, you're clear on the day. Assuming, again, SPY's over this level, and IWM is over this level. Kind of like a broken record. Until then, I'm probably going to sit on hands for now. Volatility getting a spike here. Did we get news? Let's see. Did we get any news? Anything to cause a little bit of a pop in, a little bit of fear? No, not really. Just so you guys know, the fear and greed index is at a 29 out of 100 right now. And yesterday apparently was extreme fear with a 24. So it's looking like the market is more fearful right now off of one red candle. Interesting. To say the least, that is very interesting. I want to also be careful about giving any analysis on individual names right now because the overall environment could make it could invalidate trades very quickly. I know I highlighted what I'm already spoke about on the program, QS and NNE and UUU, which have all sold off since I've spoken about them, as has the market. But I want to be very careful when highlighting names at this time, just because a lot of the names I've spoken about recently are very momentum driven, and they're very, when the bottom falls out, it falls out hard, so to speak. So you don't want to be there when the bottom falls out. And SPY getting a sell here. Ruh-roh, Shaggy. That's not good. I'm going to guess it's NVIDIA. Yep. Google catching some of that too. Your Mag 7 are all getting smacked right now. It's all Mag 7. No bueno. Back to the POC essentially on SPY here. You're going to get a little bit of a volatility pop there. Back to 2027, just shy of that 2030 on the VIX. UVXY broke over that 1125. Now back testing essentially where the POC on the day at 1140 on this little sharp fall here. This is why I said, even though I'm leaning more bullish, I am not going to be a bull on the day. I mean, I'm not really going to even trade today unless that very specific criteria is fulfilled on 3 indexes and on volatility. Because that is a condition, those are the conditions I need to have a highest probability of being correct, because I don't really want to be short today. And I'm running against that old market adage. Like I said, we're running against that the markets don't bottom on a Friday thing, which is why I still have a bear position on just in case to protect my portfolio. So it's a very sketch time. It's very sketchy, and you want to be very careful because there is an argument both ways. Your trigger points are here. Let's play this game. I gave you guys the bull outline for the day because that's what I'm leaning towards. What's my bear outline for the day? So if I wanted to be a bear on the day, just to keep it real simple, at least below your 200 MA, which is this blue line on my chart here, on all 3 indexes, which we're currently above, with a VIX north of at least its high of the day, so we'll call it 2050. So I want VIX over 2050. And for me to actually be a bear, this is actually the biggest point of confluence I would use. 1150 on UVXY. If we go north 1150 on UVXY, then I'm going to do one of 2 things. Be hands off or be a bear. I would not be a bull at that point. So now you have very specific triggers. Ooh, this is a good alert I just got. I've been waiting for this one. You have very specific triggers on where to be long and short. Otherwise, where you might want to just sit hands off. Now, I just set up an alert for this a while ago. HURN. Hearn. So this is a consulting, healthcare consulting company. And it has had a decent move here in the near term. Has been grinding up pretty solid, as you can see here. Got a little bit of rejection here, now sitting on this LOI of support that I have here at 145.46. I set alert above and alert below, because if it breaks this and goes lower, it can get to 140.52. I like this name. If you want to look into this name, the fundamentals on this name are pretty solid, and it's clearly on a nice little rally here from August. Getting a cool off here makes a lot of sense. If I can get a little bit cheaper, I will. But this is an interesting name you want to take a peek at, because it's not a far cry from breaking this this all-time high here. And if you look at it on the monthly, you've got basically like 4 taps almost with a monthly red star up here. So if it can, like, at least it's going to retest here, cool off a little bit, and it gets some propulsion to break that 155, this is going to melt up and continue its very strong rally here. It's holding bullish on the weekly. And the daily, again, it's a little bit shaky here. That's why I set for a retest here, and that's why I set my alerts here. If it was to retest, where I'd consider an entry. And on the monthly, it is a tiny bit shaky just because of this current monthly candle, and the month is still open, obviously. So we'll see. But if it can break this on the monthly, even though it looks like MACD might be curling over here a little bit, you're still riding decent bull momentum on the monthly, on the weekly. And even with this drawdown on the daily is not too bad here. This is a little bit spready. It's a little bit lower volume on the day in general. Volume for this name is around like 7,000, or it's for now so far only 7,000. And it's a $2.5 billion market cap company. So there is room that this could actually move a little hard, because it is not a small cap. It's a medium large cap, right? So there is an ability here for a sharper move, breaking over 155. Options chain is very light though. So as you guys know, I like to look for equity plays that have option support, meaning we see a lot of OI that can help perpetuate a stronger move to the upside. Like we talked about in Target, how that had a gamma ramp ability. But this one is very illiquid from an options point of view. I definitely would not trade this one on options. As you can see, the OI here is a desolate desert. So I would not touch that on the options chain. However, for shares, very interesting consideration. Put this on your watch list. HURN, that is Hearn. Feel free to dig in and let me know what you think of it. All right, maybe we're gonna wrap this up a little early today, because this is a so far a paint drying kind of day. I gave you guys the outlines. I mean, that's what I'm doing today, and I'm not gonna do much more. I'll be straight up honest with you. After a day like Friday, you want to set very specific parameters for yourself. And I'm not doing much more unless said parameters break either one way or the other, which I think is the best way to trade, really, especially when we see a more volatile environment. You want to put very, very, very strong, what's the word? Guardrails, right? On if you're going to do something, if this, then this. I will trade if this criteria happens, and only if this criteria happens. And as you see with me, what I like to do is set very specific multi-step criteria here, where I'm not even taking, more than likely not taking, unless it's an excellent setup or whatever, even individual company trades today, unless maybe equity I will, but on options specifically, because I don't know which way the wind's blowing, as I like to say. I like to know which way the wind is blowing. I like to know if the market is leaning more bullish or leaning more bearish. And this kind of price action here tells me the market doesn't know what it wants to do yet. It doesn't. It is still more bullish than it is bearish. Well, IWM just made a low a day, technically. The Qs are holding up better. And SPY is holding up better. But getting a push up and coming back down tells me the market's like, we don't know what we're going to do yet. And if the market doesn't know what it's going to do, I don't know what I'm going to do. But I know what to do when it happens, meaning if I see what I need to see, then I know to be a bull on the day. And if I see what I need to see, then I know I need to be a bear on the day. As I like to say on this program, I want to highlight to you guys that it's not all about being a bull or a bear, if things are bullish or bearish or whatever, because I feel like that is a very small-minded way to think, especially if you're a day trader or swing trader. Obviously, you lean one way more than the other. Things may seem more bearish, seem more bullish. What I would challenge you all to think about, as I like to say on this program, is to approach things from is this more a risk on or a risk off environment? Do I want to expose my money to this? Do I feel like I have a higher probability of success right now, or do I have a higher probability of failure? And based off that information, or based off that opinion, what do you do? right? So if I have a higher probability of success, then I want to trade as much as I can because I have a higher probability of success. But if I have a higher probability of failure, why would I expose my money to that, right? That makes a lot of sense when you think about it. So from what we're seeing right now, I don't want to expose anything either which way because the market has not picked a direction. We have not broken my bear criteria to tell me that the market is bearish on the day and it will break Friday's lows. And we have not broken my bull criteria that says the market is bullish on the day and the market will continue to rally to the upside. We are in the middle. We're somewhere in the between. And actually, if you want to look here on the day, let's go from lows to highs here. Low to high. Market has only had a range of $3, which is actually pretty decent when you think about it because we've had tighter ranges recently. But we've only moved about $3 up and down today and basically around open's price right now. So there is not a decision made. For those of you that are like orb traders, you trade the first like 15-minute breakout. Yeah, okay, you could have made a little bit of money there, but there was never continuation. It was never confirmed. That's why I said you need to be under 11 on UVXY. You need that support from the Qs to break over this key level. It didn't happen. IWM was good to go. SPY was good to go. Support was not there from the NASDAQ. And volatility was not supporting the move either, which means it's not good yet. I don't want to be a bull yet. I don't want to trade bullish yet. And the same rules would apply in the inverse as a bear. So what I would leave you with today is do not be super aggressive today until you see a clean choice of direction, which I gave you the outline for both if you want to be a bull today and if you want to be a bear today. If neither happens and we stay in this range today, I think the most prudent thing to do is nothing. Sometimes you got to know when to hit the gas and when to hit the brakes. And when you are in a range like this, unless you're trading futures or you're scalping, which would be a prime environment for this, where you want to scalp the lows and trade them and scalp the highs and trade them, or you're trading futures and you can make quick money that way. If you're an options trader, day trader, swing trader, you probably don't want exposure to this right now, at least yet. That can change. It will change more than likely. I do think either way we're going to get a range break today. I don't think we're going to sit here kind of like on a doji. I do think there's a higher probability of getting a bull or a bear move today and not like just kind of a bounce around chop day because of all the information I've given you guys this morning. But that doesn't mean it's not possible. So that's what I want to leave you guys with today. Don't forget, tomorrow we're going to do another stream and on Wednesday. So same bat time, same bat channel, 9:15 right here on X, on YouTube, on all the other social media channels. Thank you guys for tuning in. If you haven't already, before you pop off, before you leave the show, drop a like on the stream if you enjoyed it. I appreciate your support. And as always, some will say you need an edge to trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, guys. And remember, precision beats prediction every damn time. I will see you tomorrow at 9:15 a.m.
The time has passed, and that's a wrap.